Did you know 97% of option traders lose money?
Are you serious?
Once I was part of that statistic, until I learned these 5 major mistakes that all beginners do. And stick around till the end, because I'm going to reveal all of those mistakes so you can avoid them in the future. Mistake number 1.
You're making a terrible mistake.
Not using probabilities. Most option traders just buy and sell options
do is buy and sell and invest capital and manipulate markets
without looking even at the basic Greeks on the option chain. One of the most important aspects that you must focus on are probabilities. Using probabilities to your advantage will give you an edge and allow you to make money in the future.
An honest mistake
that most option traders do is trade illiquid products. You can see if a product is liquid or not by looking at the bid and ask of an options chain. If you look at a very liquid product like SPY, you will see that the bid and ask of any option is only 1 cent, sometimes 2 cents. That means it's very liquid. That means if you buy an option and then 1 second later you decide not to perform that trade and you want to close it, you will only be punished by 1 or 2 cents to get in and out of that trade. The third mistake most option traders make
was your mistake, not mine.
Is legging in and out of a trade. And what do I mean by legging in and out? Let's say you want to put on a call spread. A call spread is made up by 2 parts, a long call and a short call. And some people want to game the system. They want to start by putting on the long call first, hoping that the stock goes up. And once it's up and your call is a little juicier, they want to sell that further out of the money call for a bigger amount of money. Of course, that sounds very exciting. But what happens if we try to leg into a trade, we put on our first part of the leg, and then the stock goes against us? Then we're going to be facing a totally different animal. The trade that we intended to do, which had 2 parts, a long and a short, now only has 1 part, maybe a long that's in the water, and mathematically the trade we wanted to place at the beginning is now no longer valid, and it's no longer profitable. The fourth, and probably one of the most critical mistakes that most option traders make, is sizing their trades incorrectly. One of the best traders in the world, my friend Tom Sosnoff, always likes to say that size kills. Size is the #1 killer and destroyer of options portfolios. And you can do any trade that you want. You want to buy a call, you want to sell a call, you want to sell a put, you want to sell a call. You can do anything you want as long as the size is small and the size is reasonable. Now, the number 5, the 5th most common mistake why options traders lose money is buying out of the money options. Probabilities of you making money on those are very low. Of course, probabilities are meant to have a success. Of course, you go to Las Vegas, you put money on 34 red, boom, of course, one of these days you're gonna hit it, and you're gonna hit it big. Same with out of the money calls and puts, but the odds are gonna be against you if you keep doing that type of trade constantly and not putting the odds in your favor. Now let's do some takeaways. If you want to be a successful options trader, be very mindful of these 5 major trading mistakes, which are not using probabilities to your advantage, trading illiquid products, legging in and out of options trades trying to game the system, misunderstanding size, understanding notional value, and buying out of the money puts and calls that have a very low probability of success and that have several factors working against you. Of course, there's no guarantee. There's no guarantee you're going to make money trading options, but at least if you avoid these 5 major mistakes, you're going to put the odds in your favor and you're going to have more chances of making money than losing money while trading stops. If you want to grow your pile, remember, you got to risk it to get the biscuit, baby.